Hi, I'm Pace Ellsworth. I've waited almost 4 years to say this, but Helium is back. As many of you know, we started in 2017 trading cryptocurrencies with Uphold.com. And right after we launched, the cryptocurrency market started crashing. We tried a lot of different things to fix our algorithm, to fix the way we were working with the platform we were on, but nothing worked, and thousands of users that invested over $2 million lost almost all of it. So we did shut it down in early 2019, never giving up on coming back and taking care of our users. So you might have written us off. You might have said they're never coming back, but we're back. Here's what changed. For the last 15 years, my family's been working with a special type of life insurance contract to build retirement plans. And the way these work typically, matches or outperforms the S&P 500, at least especially in down years. However, a few months ago, I was working with my brother, and we figured out how to take these accounts and get 2 to 5 times more growth in them. So instead of getting the 6 to 10% per year on average, you could grow a tax-free retirement plan into an early retirement fund at 12 to 50% per year, on average over 10 to 20, 25 years. So out of the box, there's life insurance attached to it. So from the start, you have this permanent death benefit of $200,000 or more in case you pass away unexpectedly. You can also pull these funds out early for critical illness, terminal illness, or long-term care. Because the returns in the account are also insured, they can't lose money if there's a crash. That's just the way that the insurance companies have set it up. So they take a portion of the growth in really good years, and they hold on to it as a reserve in case of bad years. And these are held, like I said, by an insurance company. The one we work with is a mutual company, so that means it's owned by all of the members. So if you get an account, you actually own part of that company, you get a profit share. And this was founded in 1880. They keep 100% reserve. They're actually give you better returns than the FDIC insurance if for some reason something happens to the insurance company, which it's been 140 years. And these are also funds that are going to be managed by a fiduciary investment advisor. So you're going to get to meet them for free as part of setting this up, and once a year you also get to meet with them for free. You can sign up on our homepage. It's the same, helium.com, and we're bringing it back. Here's our long-term plan. We're hoping to get a million members signed up in the next 10 years. Now, a million, that's out of 350 plus million people in the US, it's less than 0.25% or so. So it's not, or a little bit more than 0.25%. So we think we can do it. And the reason why is because nobody's really built an app for this before. But we're going to do it. These things have been around for decades. Rich people use these. We're going to build this as an app for millennials, Gen Z, and all their family members. So anybody can get these accounts from age 0 to age 70. Then we're also going to start a fund, like a liquidity pool. We're thinking about putting a DAO on it, so a decentralized autonomous organization, where 50% of the funds that we would get from our partners for referring these accounts over, we're going to put it in there, and anybody that wants to contribute to that could get a 10 to 20% annual return. There'll be a cap on how much people can invest in that, though, so that it stays solvent, because it needs to come out of the funds that we get from people that are creating these accounts. The investors and members in Helium will also have ownership in that fund, so they'll get to make decisions about how Helium runs and who gets the incentives and when. And this will also gradually pay out to all the past Helium users, equity investors, and anyone else also. Once that's all paid out, it'll continue to pay out for regular bonuses or holidays or whatever bonuses we choose to give to people, like referral bonuses. And then the next thing we're going to do is build a web and mobile application for this. The website is already ready, but we're going to build in ACH banking APIs so people can maximize these policies like no service has ever allowed them to before. to maximize the amount that you can save. So this is, again, this is something for an early retirement plan. The whole point of this is that you're going to start putting away a percentage of your income for retirement. One thing we're going to do to incentivize that is work with small businesses to implement a matching policy. So if you put up to 10% of your income, maybe more, then they will match part or all of those funds to help contribute to your retirement plan. So go ahead and sign up on the site. It's free. You can try out the retirement calculator. I'll give you a sneak peek of that right here. So this is what it looks like. You should be able to go through, put in your current age. I have it bound right now so it doesn't show for outside of certain ranges. Same with the monthly income. So like this works okay. When you put in, at 10% of 2,000, that's only 200 per month. That works okay. It works way better if you're able to put in like 1,000 a month, which would be 10% of 10,000, something like that. Maybe that's 20% of your income. And then all the description of what that gets you is at the bottom. And then you can set an appointment here to get all of the details and go into depth and have a very personalized plan. So you can just say whether you're a homeowner and moving soon or a business owner with some employees, these provide additional opportunities for you to get additional benefit out of these policies. But you can put in your state, just choose a time, and then we will, if we double up, we might need to move your appointment, but that's how we get started. Okay, I'm going to make another short video just to outline this process for this page. But we're back. We are back, and excited, very excited to get started. We'll see where we go. So glad you could be here, and check us out.